Welcome back. You're watching News Now. In Singapore, state investor Temasek remains bullish on India, reaffirming its commitment to the country's long-term growth story. The firm says that it is on track to achieve its $10 billion investment target announced at the start of 2025. In fact, the company has already invested close to $9 billion over the past 3 years. And despite the ongoing West Asia crisis, Temasek believes that the Indian economy is resilient and it's backed by its structural strengths that can withstand global shocks. The investment giant has also said that it remains open to more buyout opportunities in India. My colleague in ET Now's Anurag Joshi spoke exclusively to Vishay Srivastav, who's the managing director for investments. Take a look.
As you rightly said, about 3 years ago, we had said that we see a line of sight to investing between $8 to $10 billion in the country in the next 3 years. We are on track for that. So in the last 3 years, we have invested roughly $9 billion. And I think given the pipeline of opportunities we see today, we are confident that we can maintain our pace.
Conflict in West Asia has flared up again with U.S. strikes from July 8 on Iran. Shipping through the Strait of Hormuz, that's facing disruptions again, and there have been reports of attacks also. How do you view the fallout of those developments on the Indian markets, and how do you see Indian markets? Do you see Indian markets to be resilient or in line with the volatility you're seeing globally?
Yeah. No, I think that's a very timely question, because as you know, India is a economy that is dependent on importing crude, right? We import almost 85% of the crude we use. And so anything that disrupts that supply and the price of what we import obviously could have implications for our macro. It could have implications in inflation. It could have implications on our foreign reserves. It could have implications on our current account deficit. And so it is important to watch those developments closely. I think that India enters this crisis in a stronger position than it has been in the past. All from foreign reserves, from baseline inflation, from the status of our fiscal deficit, from the status of our current account deficit. We enter this crisis in a good position. I think we have the resilience to withstand shocks as long as they are contained to a certain time period. I think it's the duration of the shock that is a bigger risk than the impact of the shock in the short term. And so if structurally crude oil prices move up materially from here, then I think it would be a problem. But if the crisis remains contained and we've seen in the recent past also, things can change quite quickly. When we had some expectations of peace, we saw crude oil prices drop pretty quickly back to baseline. So it's difficult to say what's exactly going to happen. It's difficult to forecast with a great amount of confidence. But over the long run, we believe that India has some structural advantages that do not go away with this crisis, right? So we've got a large and aspirational young population. We've got a cadre of very good managements. We've got some really solid entrepreneurs. We've got an economy which is more or less domestic and therefore not very, very dependent on what goes on in the rest of the world. And these advantages, we believe, will continue, whatever the short term may bring. So it is our job as long-term investors to keep finding the right opportunities and invest for the long run. We are hopeful that that things normalize as quickly as possible.